Hey moneymakers! Welcome back to Money Made Easy, your go-to channel for simplifying the complex world of finance. I'm your host, and today we're diving deep into the mind of a financial legend, the one, the only, Dr. Michael Burry. You probably know him as Christian Bale's character in The Big Short, but Michael Burry is much more than a movie character. He's a real-life investment guru, famous for his contrarian bets and, let's be honest, his uncanny ability to predict major market shifts. From his original call on the housing market back in 2008, to more recently investing in GameStop before it went vertical backing, Chinese tech stocks, and even predicting a massive wave of post-COVID inflation when the rate was barely 2%. The guy has been incredibly interesting to follow. But over the past 2 years, it's been radio silence from Burry. He shut down his Twitter, doesn't do interviews, and that's left us with only one way of following what he's up to: his 13F filings. These are the quarterly portfolio updates that all the big investors have to file. Well, just last week, Burry released his updated 13F, his filing for the first quarter of 2025, and in it were some very unexpected moves. Michael Burry has sold all but one of his stocks, but it doesn't stop there. He's also opened up put option positions, literally betting against the very stocks he held just 1 quarter before. How's that for a complete 180? So what exactly happened in his latest filing, and what can we take away from it going forward? Let's break it down. If we look at his 13F filing from the end of last year, Burry had a healthy portfolio worth around $77 million. In it, he held 13 positions, with some of his largest being Chinese tech stocks like Alibaba, Do, JD.com, and PDD Holdings. These companies had been consistent fixtures in his portfolio for approximately 2 years, leading many, including myself, to believe this was a long-term bet on a broader Chinese economic recovery. These seemed like good companies, simply beaten down by China's general economic situation. Holding them long-term looked favorable as the country recovered. But turning to the most recent one, 3F filing for Q1 2025, we see a drastic change. His portfolio has dropped from $77 million to just $13 million. He quite literally sold every single company bar a lotter. The rest are gone. Alibaba, JD, Baidu, of them. So, Burry has turned incredibly bearish in the space of just 3 months, seemingly not wanting to hold anything at the current time. But this is where the plot really thickens. We turn to Burry's options bets. We can see that he's also bought put option positions that are active bets against the market. In fact, he's actively betting against 4 of the very Chinese tech stocks he was betting on just 3 months earlier. He opened put option positions against Alibaba, JD.com/PDD Holdings, and Baidu, as well as other high-profile companies such as Nvidia and Trip.com. So, it's not as though he's simply exiting the market because he's wary of recent turbulence. He's actively betting against these 6 companies. The big question is, why? How on earth has Burry had such a rapid change in sentiment in such a short period of time? Well, I wonder what happened across the 3 months that were January, February, and March of this year. Ah, yes, that's right. The US launched a massive trade war with China. As we know, after Liberation Day, Donald Trump announced blanket-style tariffs of up to 67% on a wide range of Chinese imports. Then, China hit back with their own tariffs on US goods, reaching 125%. And the US hit back again, raising tariffs on Chinese goods to 145%. Now, while the most recent news suggests this is all on a 90-day pause, for Burry, who had been long on Chinese tech companies, this obviously changed the game. These were no longer just normal stocks anymore. They were caught right in the middle of a political firefight. Tariffs, as we know, can hurt consumer demand, squeeze profit margins for companies, and trigger a wave of regulatory headaches. Add to that the ongoing risk of US delisting threats, capital controls, and negative sentiment towards Chinese equities in the West. And suddenly, the upside case for these businesses doesn't look as compelling. In fact, if you were bearish on global trade or worried about geopolitical escalation, Chinese tech stocks might be the first place you'd short. And judging by these put options, it looks like that's exactly how Burry sees it. It's kind of weird. I don't actually think Burry sees these stocks as bad businesses, not in the slightest. I don't think his conclusion on the fundamental strength of these Chinese tech businesses would be any different than 3 months ago. He just sees the geopolitical landscape changing, and that is enough for him to not only exit these stocks, but to actively bet that their share prices will fall. And so far, this is likely a pretty good bet by Burry. It's difficult to know for sure because we do unknow the exact strike prices of his options. But assuming he bought these put options in March, which would have lined up with when the trade war rhetoric was really heating up, would have most likely made money on the Alibaba, JDPDD, and Baidu puts. That is also assuming that he probably sold shortly after the initial market carnage caused by the trade war news, which I assume he likely would have, considering his tendency to take short-term profits when they're on offer. Of course, I don't know that for certain. There is unfortunately no way of knowing Burry's exact moves, as we just get these updates once every 3 months, and we don't even know the strikes. But that's my best guess. Beyond the put option contracts against the Chinese tech stocks, he also bet against the high-flying stock Nvidia. On paper, this seems smart, with the company currently trading at a PE ratio of 46. But man, I don't know if I could bet against that stock. Seeing both the impressive business performance over the past few years, that's undeniable. They've done very, very well. Combined with the hype we've seen in the stock, I mean, he's brave. He is very brave. He was betting against Tesla at the height of their hype, but personally, I don't think I could. The last company he holds put options against is Trip.com, which you may not know is another Chinese business. Yes, they do have global operations, but they are headquartered in Shanghai, and they trade on both the Hong Kong Stock Exchange and the Nasdaq. So, I feel like this put option position probably again ties into that trade war narrative I was just talking about. Overall, that's the big news of what Michael Burry has done over the last 3 months. But the next thing I wanted to talk about is the one stock that remains in his portfolio, and that stock is Lauder. This immediately brings up the lipstick index hypothesis. For those that don't know, that was actually a term coined by Lauder chairman Leonard Lauder during the early 2000s recession. It refers to the idea that during economic downturns, consumers tend to treat themselves to small, affordable luxuries like lipstick instead of big-ticket items. They still want to indulge, but they're priced out of big indulgences, so smaller indulgences become increasingly popular. Now, this could be a part of Burry's thesis. However, I personally don't put too much stock in that. And the reason is the company's been struggling. It's been really bad. Revenue has been trending down. Net income has been trending down, even into the negatives. And one of the main reasons for this has been weakened demand in the Asia-Pacific region, particularly China, and also disruptions in travel retail channels, such as duty-free airport stores, cruise ships, international train stations, that kind of thing. To combat these headwinds, the company has launched a broad restructuring effort that includes cutting up to 7,000 jobs as part of a multi-year cost-saving initiative. Management has also rolled out a profit recovery plan, aiming to boost operating profit by $1.4 billion by 2026. Leadership is also changing, with their longtime CEO stepping down and a new CEO taking the reins. But honestly, if you ask me, I really don't think Michael Burry is looking too far into the operational details here. I think he is much more interested in this. After its truly massive sell-off, Lauder is now trading at levels not seen in nearly a decade. The company is now down 82% from its highs at the end of 2021. And knowing what Burry is like, ever the contrarian, I think he smells a classic value play for a company with a portfolio of powerful global brands like MAC, La Mer, Clinique, and of course, Lauder itself. This could represent almost a cigar butt style opportunity, where a company has been beaten down so much that Burry is really just looking for that one last profitable puff. Burry is of course very well known to pounce when the market overreacts to short-term problems. Now, I personally don't know Lauder or the makeup business well enough to be able to determine whether this is a short-term problem or whether it's something fundamentally problematic. But at least from Burry's bet, it seems as though he's thinking that with a turnaround plan in motion and new management, Lauder might be one of those companies that for him has a favorable risk-to-reward ratio. But with that said, I do just want to be clear. Should Lauder show even a slight stock price bump, it would not surprise me in the slightest to see this one just gone from the Scion portfolio in the next 13F filing. From looking at Burry's 13Fs for a long time now, I think what he's hoping for is just a shred of positive news and for investors to start even believing in a turnaround. At which point, he'll just bounce out of the stock and take his profits. So, to be clear, I don't think he's actually going to stick around for the full turnaround story, should that eventuate. And that's really the last thing to discuss when we look at Michael Burry's 13F filings. How much you as an investor can actually learn from them. I've said this before, and I'll say it again. I really do think there is too much that we can actually take away from them as individual investors. I mean, you guys love to see these Michael Burry updates, so I'm happy to keep making them. But at the end of the day, we really need to remember two things. The first is that Michael Burry has proven time and time again that while he still thinks like a Buffett-style value investor, he acts like a short-term trader. He's quick to identify mispricings, make a move, and then exit. The other thing we need to remember is that the 13F filings are only released to the public 45 days after the end of the quarter. So all the information we're getting now is old news. Now, those two things being a short-term trader, and the data being 45 days old, that is not a great combination for us long-term investors. To be able to get anything truly valuable out of his 13F. It works for investors like Warren Buffett, because if you see a big new position pop up in his Berkshire Hathaway portfolio, it's highly likely that the stock will stay in the portfolio for many years to come, like Apple back in 2016. But for Burry, unfortunately, the same just isn't true, because we're looking back in time by 45 days. The truth is, Michael Burry has probably already closed out these short positions. He's probably already gotten rid of his put options, with the market no longer heading south, and trade tensions cooling between the US and China. Please remember that the information provided in this video is for educational and informational purposes only, and should not be considered financial advice. Investing involves risk, and you could lose money. Michael Burry's past performance is not an indicator of future results. Always do your own thorough research, understand your personal risk tolerance, and consult with a qualified financial advisor before making any investment decisions. So, moneymakers, what do you think? Is Michael Burry an investor you like to follow? Do you look at what he's up to, or do you not care at all? I'd love to hear your thoughts down in the comments below. If you enjoyed this deep dive into Michael Burry's latest moves, please leave a like on the video. You guys seem to like these 13F updates, and if you like them, I'm happy to keep making them. And don't forget to subscribe to Money Made Easy for more simplified financial insights, and hit that notification bell so you never miss an update. Thanks very much for watching, and I'll talk to you guys in the next video.